Thank you, Larry, and good morning to all. So on the first slide, what we're going to talk about here is global economic growth was positive, but since the outbreak of the continued spread of the coronavirus, the IMF now forecasts global growth to contract by 3% in 2020. It's important to point out that this is much worse than the 2008 2009 financial crisis. Nigeria, in line with global economies, is forecasted to contract around negative 3.2%. But what we've seen a lot of central banks and governments introducing numerous plans to cushion the effect. So when we take it back home, what are the indicators that we look out for in Nigeria? The first is currency. As of 2019, the currency really ended. The NAFEX rates in particular was at 360. Right now, as of Q1 2020, which is the end of March, we've seen it at 380. In the block markets, you've seen currency even move as high as 465. The question is, where do we see the direction for the currency? We think there's still more risks to the downside. So that means that there might be more depreciation in the Naira. And this is just driven by lower oil prices. And also as portfolio managers take money back to the economy in a flight to safety. Inflation on average in 2019 was 11.4%. As of March, March inflation came in at 12.26. We still also see this to trend higher. The border closures, the closures of different states, transporting food from the food producing states to other states could also affect inflation. So we also see that trending higher for the rest of the year. Moving to monetary policy, we know that the monetary policy, for the Central Bank of Nigeria, their main concern is FX. So we believe that the central bank is going to do everything in its power in order to defend the currency. That's been the main agenda of most governors or most central bank governors. Going on to the next slide, we're going to also talk about oil prices. Oil prices as of 2019 averaged around $66 a barrel. As of Q1, oil prices for Brent in particular came as low as $20 a barrel. Other oil benchmarks like the WTI actually traded negative. What does this mean? It means that producers were actually given the oil for free because there was no storage capacities. As we're all working from home, less transportation, there's been less demand for oil. And as we know, this also affects Nigeria. So when we rope this into GDP and fiscal deficit, like I said earlier, fiscal deficit really is the revenue and the expenses of the government. I guess what's important to note is that in the last 2 weeks, we got $3.6 billion from the IMF. We're expecting another $500 million from the AFDB, the Islamic Bank, as well as $1.5 billion from World Bank. And then the federal government has also indicated that they are also going to increase local borrowings. I believe as of this morning, the Federal Executive Council has approved the new revised budget with the benchmark of $25 a barrel. So that just means more borrowing from governments from both local sources and concessionary lending. In all, how does this affect you? So financial markets have been volatile across the globe, with Nigeria not being an exception. The Nigerian Stock Exchange fell as much as -20 before powering losses to a -10. Fixed income assets have also been volatile. What we expect over the next coming quarters is for a lot of volatility as governments and individuals try to cope with the effects and fallout of the coronavirus. If there are any questions that you might have, please utilize the Q&A button, and I'll be happy to take them at the end of the session. Thank you.
Thank you very much, Wale, for that insightful presentation. And I would just like to reiterate the main points of your presentation. The COVID-19 has presented the world with a different dynamics that nobody was prepared for, and now it's changing the landscape. Governments around the world are trying to use different tactics, trying to stimulate the economy to get it back to the previous normal. And I think the implication for us is also that we are in trying times right now, and the world is in an emergency situation right now. So even for us as individuals, we also need to prepare for emergencies. And talking about that, we just want to quickly take a poll right now. A poll is going to appear on our screens. I just want you to quickly take that poll. Is asking a question about emergency fund. That is, how can you be financially healthy without an emergency fund? So we just want you, and please note that this survey or this poll is actually anonymous, so nobody is saying anybody's name or details. So we want you to take it and just participate. Let's just have an idea of what you think about emergency fund generally, even as it relates to you personally in planning for your future. So the results are coming in right now. So please, if you have not done yours, you can quickly do that now. The poll is going to end in a few seconds. Interesting. The responses are very interesting. We're going to be sharing the results in a moment. Okay, so I think that's it. Thank you so much for everybody for participating in the poll. So we're going to share the results right now, and this is going to tie into what my colleague will be speaking on next. So I'll just share the result is being shared right now. So you can see about 68% of us think that everyone needs an emergency fund, and while 32% of us thinks that not everyone actually needs an emergency fund. And just to elaborate more on this and how we can take advantage of this, I will just invite Raphael Emayonu to take us through the next session.